You're listening to the Quint's podcast.
Hello and welcome to a live Big Story podcast. And I'm your host, Himmat. Today we'll be breaking down the sharp fall that the Indian equity benchmarks-Sensex and Nifty saw on 24 January, logging in their worst decline in 2 months. Sensex crashed over 2,000 points to 56,984, while Nifty 50 plunged over 500 points to 16,998. This is the sixth continuous day of this downward spiral, wiping more than 17.54 trillion rupees of investors' wealth. And some of the biggest losers in this dip are actually the new stock listings like Paytm, Nykaa, and Zomato. Zomato plunged over 20%, while Nykaa lost 13%, and stocks of Paytm have already plunged more than 50% since its IPO. So, what is causing this crash? And what should you, as a retail investor, do? Joining me today is Niraj Shah, who is the markets editor at Bloomberg Quint. Niraj, welcome to the Big Story podcast. It's always a pleasure speaking with you.
Thanks for having me, Himmat. Can you hear me clearly?
Yeah, I can hear you clearly. So, Niraj, I want to start with why we are seeing the sharp fall for the first time. When I try to Google the reasons, a bunch of them start coming up, like rising oil prices, inflation, the tensions in Ukraine, and the number one reason was that a US Federal Reserve panel meeting, which is scheduled for later this week. Uh, why are investors being spooked by a meeting? Can you explain its significance?
Um, so, okay, just before I answer that, Himmat, I think one has to keep in mind that a lot of events have gotten front loaded in the first quarter of 2022. So, while the budget and typical nervousness before the budget would happen, 2 days ago there was a WhatsApp message of, on the day of the fall, there's a WhatsApp message of how the long-term capital gains rates would be tinkered. And I'm sure it didn't come from the finance minister. So
Mhm.
all of these things keep on happening. So the budget, the fact that there is a set of elections, including Uttar Pradesh, in the first quarter. We have an earnings season which hasn't exactly been hunky dory in the first quarter, and uh, the earlier belief that the Fed would start tapering, and then once the taper is over, then maybe the Fed will then give an announcement of, or the timeline of when would they start raising rates, as opposed to that, and therefore it was believed that that rate decision will happen after the first quarter. So as opposed to that, now a bunch of global houses, including Goldman Sachs, BofA Securities, etc., believe that the interest rate hikes may happen slightly earlier than that, as soon as the tapering is done in the March meeting itself, and therefore that also has gotten preponed. And we do have the Fed speaking tomorrow on the 26th of January, wherein they'll give some indications of whether they indeed plan to do an earlier rate hike. So all of that leads to a bit of nervousness in the markets, and naturally we have had a corrective move. I mean, not just what happened on 24th January, but in the last few days we've had a significant corrective move.
Okay. So for the reasons also we discussed right now, was a single day fall of over 2,000 points expected? Like, or is this just like a monkey see, monkey do kind of scenario with retail investors following each other?
You actually have to believe that it was not as much a retail investor led fall as it was, or as most of the other falls have been institutional selling led. Frankly, the retail investor has been a net buyer, I would reckon, on almost each of the falls that we've seen. Yesterday, the institutions, of course, sold close to 3,700 crores, if I'm not wrong. And when I spoke to brokers, I also heard of some margin calls getting triggered on select stocks. So it's probably a combination of forced selling in a small measure at some brokers from the retail side. And of course, largely the kind of FI selling that we continue to see each of the months, each of the last 4 months, including the current month. We've had significant selling. On a given day, a 2-3% fall can happen. So I don't think 2022 will be devoid of such days. We may not have a 3% fall, we may have a 2% fall, but I think we'll see a number of such days.
Okay. So far today, are we seeing this market in a corrective mode, or do you think this plunge is going to continue for a few more days now?
Anybody's guess, really. When I speak to some dealing rooms, when I speak to some people who look at support levels, uh, they do believe that they did believe yesterday, by the way, that it was an opportune time to maybe put in 10, 15, 20% of the money to work, and then see if the markets would correct more than put in some more money to work. We've had a slightly stable day today, but I mean, remains to be seen, really. Anybody's guessing, but I don't think there's anybody who can give an answer to this. I do know that what most smart money managers are saying, which is that even if the market continues to fall, these are levels wherein uh, just a relative thought here. While the Nifty would have corrected 8-9% or what have you from the highs, a bunch of broader market stocks, some of which you referred to in your opening preamble, have corrected anywhere between 20% to 60%, right? So there is relative value starting to emerge in those pockets. So people will nibble in those pockets. You don't necessarily have to buy the Nifty futures, right, in your portfolio. Buy specific stocks which are at a good value. So that has already started to happen.
Neeraj, I want to know, how are the market veterans seeing this dip? Like, is this a good time to enter the market and buy the dip and go into like those investments like Nykaa or Zomato, which were not very affordable earlier?
So that's a tricky question, right? Because what is impacting the sentiment around some of the tech or tech-enabled companies, and I think, frankly, in this fall, people have clubbed the platform companies with the IT services companies, and everything has gone down. Accenture, for example, has corrected about 20% after giving such stupendous results, as also with some of the other Indian IT names as well. Infosys, for example, maybe not a 20% fall, but as a correction. So the point is, Himmat, should people buy into, for example, the insurance, the platform which is an insurance vending leader in PB fintech, or a Zomato, which is arguably one of the leaders in the food delivery space? I mean, or Paytm is a difficult question, really, because it's not a leader. But I'm saying a bunch of leading stocks have come off. Now, it's always a case of valuations again. There are a lot of people who, when Nykaa was at 2200 or 2300, said that they would be comfortable buying it only when it halves from those levels. And they were candid enough to say that they didn't think that Nykaa would ever reach levels of 1200, 1300, but they would be comfortable at those levels. Now, I think in this case, it's to each their own. And specifically in the case of the platform companies, it's also a factor of what's happening across the globe. By the way, Paytm has corrected 50, 60%, right? But it's not alone. The largest IPO of 2021 in Indonesia, that e-commerce platform is down some 65, 70% from the listing price. So uh, it's not the Indian platform companies alone which are correcting. Globally, this is happening, and who knows where this will stop. So difficult to call, difficult to give any. Nobody's able to give a call, Himmat. That's the point I'm making on those companies, at least.
Okay. Now, finally, Neeraj, this is something I ask you every time as my last question for whenever you're on the podcast, is that how concerned should I be as a retail investor with this crash?
So the boring answer is, if you are in here for the long term, don't be concerned. If the boring answer is that if you are indeed here for the long term, then you should be celebrating the falls, because you get to buy more with the same amount of money, provided you had some money kept aside in the first place. So, which is why I think the balanced investing approach would usually help. Now, to get to the point of whether this is concerning, sure, it's concerning, because you don't like to see so much of red on a screen, and one doesn't know when this will stop. Himmat, I dare say 2022 would be replete with a bunch of such instances. I mean, we were speaking to POFA Securities this morning, and their belief is that crude will go up to $120 a barrel. Now, whether it goes to 100, 110, 120 doesn't matter, but if it crosses three digits, then it's negative for India. That we have UP elections, and if that verdict is where the incumbent government doesn't come back to power, then people will want to believe that the policy reform measures might come to a halt. So all of those are concerning factors, and therefore, this may not be the only fall. We may have many such instances. But if you've done your bottom-up homework, if you've done your valuations, your math on your Excel, and if you believe that some companies' earnings will grow over the course of the next 3 or 4 years, irrespective of what happens to the global and the local landscape, then you should actually be happy and nibble into some of those when they reach very attractive valuations. What is attractive, of course, is anybody's question, and the I mean, the beauty lies in the eyes of the beholder.
Okay. Well, thank you, Niraj, for coming on the show again and also helping us understand this crash. It's a genuine pleasure talking to you every time I do this podcast.
Thanks for having me, Himmat, and all the best and stay safe, everybody.
And for our listeners, that's the end of the show. If you like listening to this episode, please subscribe to The Big Story for episodic updates. And you can also tune in to the Quint's other podcast series like Itni Stari Batein, Kisse Kahaniyan, Land of a Billion, and Urdunama. You'll find them on the Quint's website, Apple Podcasts, Google Podcasts, Spotify, JioSaavn, or wherever you listen to podcasts. So thank you so much for tuning in, and that's the end of the show.